Hey guys, it is Markets with May, and this is March the 4th, Friday, after a very fun and exciting week as per usual. And I am super duper thrilled to be doing a collab today with one of my favorite clubhouse rooms, live trading with Dr. A and friends. And they really are truly friends. I feel like I've known this group of people for quite a long time through the COVID craziness that we all experienced. So it's really my pleasure to have them be a part of my audience. Dr. A, we will link all that kind of stuff. If you guys are watching this through the YouTube on a delayed basis, please absolutely please subscribe to my YouTube channel. I need 100 subscribers so I can get my own URL, and I will link that as well below. But with that, let's get into what's been a crazy week. This is my YouTube, guys, so I look for that in my link tree. But let's talk about the markets today. Now, I always start with this little visualization from FinViz, who does not sponsor us, but girl can dream, right? So it's a really mixed day that we're seeing in the marketplace today. But you do have tech selling off pretty hard. Actually, all the indices are selling off pretty hard. Crude continues to go up, and we've been long-term bulls of that. But in general, I am still very bullish, Google in particular, anywhere at the 2600 level, but you want to still stay back. And as you know, we've been very bullish on energy since November, even before that. But what I want to do, because we've got all these extra really awesome folks on the call, is go through more macro, some of the themes that we've been talking about. For those of you that kind of tune in daily, this may seem a little bit kind of older hat, so to speak, but it's probably a nice review because just so crazy much stuff has been happening in the marketplace that we have been focused on. Again, these are the themes we've been focused on for slightly more than a quarter. Geopolitical instability. We've been worried about Ukraine since last year. Low supply versus demand and how that ends up playing out. Those two are probably the ones we're going to focus on today. Long-term changes in societal behavior, financial strength, and company strategy. Those are ones that we're always interested in. As relates to economic news, we are on Friday, so we got to start thinking about how do we set ourselves up for next week. For a lot of you guys that are watching, I know you're day traders. Okay, that's awesome. I'm a big supporter. But, obviously with some of this redness, it's probably either come to cash or hedge out long-term positions. We do have some, I'm going to call them potential market movers. First thing in the week, we've got consumer credit coming out on Monday at 3 o'clock, and that matters to the world because right now, one of the things about the United States that has been so phenomenal is the strength of the consumer. They've just crushed it this entire time, and I'm going to go through some of that a bit because it's really relevant as we think about how the next few months will play out, not just the next few days. The other big number we have, and it's not going to come until Thursday, is CPI. CPI, for those of you that are still kind of coming up the curve on economic data, that is the number related to inflation. There is no other number. There's other numbers that feed into potentially how people think about inflation. But CPI is inflation, okay? Let's just call it what it is. It's not something else. Don't let the other folks fool you. That is what it is. And we look at CPI year over year, et cetera. But that number, when you look at it broken apart, is also very important. In both cases, because of the nature of what we're experiencing, they will be market movers. Now, I want to talk about something that we spoke about yesterday, but I'm going to drill in on 4 of the top things that I felt. I'm sure other people have different opinions, but this is what I felt was very important from the Fed Congressional Meetings over the last 2 days. And these are the 4 themes. The U.S. Economy being stronger than other countries. The supply chain related stuff, labor, and other things. What does it mean for rates given this Ukraine-Russia? And how do we think about energy in general? Let me just call it out there as a broad topic. And there was all kinds of stuff that was spoken about. And it's always the case that some of it I agree with, some of it I'm just really worried for us. But the U.S. being stronger than other countries, we have been talking about, we talk about it on the show all the time, but in particular, it became very apparent to us as we started listening immediately to these earnings reports. And the reason it was so easy for us to see it just as the one thing that we started to see almost immediately in the earnings reports was that any country that had significant business overseas was very clearly showing in their numbers, even more so than the third quarter, that the U.S. was stronger. You know, this is UPS. Here's the U.S. business, more or less both. We see the blue line in 2001 clearly above the dotted line, clearly business to business growing at 8.8%, business consumers still above, improving, a little bit down relative to previous period, but we're still seeing overall the business side of things improving. But the volume averages were not the same internationally. And then if we were confused, we also saw the same kind of dynamic in American Express when it reported initially. The U.S. very strong, international a little bit of a different story. International travel and expense, this is the number that you really care about as relates to business side of it. Much weaker than the U.S. business side of it. The consumer in both areas has been okay because both countries have done quite a lot of stimulus, but always the international consumer still lagging behind the U.S. consumer. And then if we were really concerned, this actually came from Boeing's earnings calls, and they don't always usually produce information that's relevant to this kind of questions that I have as relates to macroeconomic stuff. This was passenger traffic. And we can see North and South America passenger traffic recovering beautifully through 2019, but we're not seeing the same thing in the rest of the world. And you just go right on down. 60% of 2019 doesn't make us feel, oh my gosh, things are great internationally versus the U.S. So we had a certain particular global opinion. In January, whenever all these folks started to report, that has really now finally is echoed by the Fed at the Senate in clear terms. They probably saw approximately what I saw, but with an incredibly larger research team is what I'm thinking. Now, these, as we've talked about, I do try to listen to about 80%. If I can get to 90%, I'll listen to another 50 of just the S&P 500 companies. And you guys will find me on Clubhouse, or you'll find me in real life, or find me wherever. I never try to talk too far out of my skis. This is really the companies I know. If you try to ask me about something I don't know, hopefully you don't take me in the rude. I'm not trying to be rude. I really just believe that good research and don't talk about what you don't know is the right way to go if you want to have some sort of credibility. But this is from last night. I finally got through number 400, which is why I'm able to do collaborations. And these are the companies, about 2/3 of the companies are doing great. Thumbs up, party hat. For me, what that means, for me, it does not mean that they beat company estimates. The estimates now in the data feeds, to me, make absolutely no sense. I have no idea how legitimately anyone would post some of these numbers, and the companies get crushed by them. For my investment style, that becomes a buying opportunity. It does not become a wholesale hatred of the company. And so when I looked at the company numbers, what I looked at to get the party hat was that they were able to get top line growth increasing, bottom line growth also increasing. So every little dollar that they were making additionally was coming straight down to the investor at the bottom part of the income statement, and no sketchy stuff in between, Amazon, that allowed you to make your numbers. And if you did that plus really gave me a good idea that you had that environment with great visibility through 2000 and through the rest of this year, 2022, then I would give you a little party hat, essentially. If it was more, slightly less growth, maybe a little bit of margin compression, but this earnings number still grew pretty solidly, I was willing to give you a thumbs up. Okay, but I wanted to listen for in the call that you did actually have control of your supply chain. If you didn't, then you kind of got this shrug from me, which I don't know which way to go. I need another quarter to understand what it is and whether or not it'll work. And then more than normal, I had more companies in this, oh my gosh, what was that category? And then 11 companies puking it out is very rare. I have not, during this COVID period, had more than a low single digit number of companies where I listened to the call and was like, what was that? Now, this is in the S&P 500 names, but what I want you to take away from this, because we're not going to go company by company in this particular call, is that largely speaking, companies are doing well. Because even if you're in the, I have no idea how to, even if you're one of these 91 where I don't quite know what to do with you, and in fairness, some of what's in this 91 is utilities companies that still have to work through regulatory issues and spend a bunch of money on CapEx to move us into a better, greener world. These weren't necessarily bad, right? This down here, this 41 is legitimately bad, but that's very small as a percentage of what I listened to. So I absolutely was thrilled to hear that my research isn't going to the left while the Fed is seeing something much cleaner through the leagues of data folks that they have, scraping the companies the same way that I'm attempting to do so. As relates to labor supply and supply chain issues, and obviously people are really sensitive to this issue right now because inflation has been so painful. It's been so painful. The CPI numbers coming in higher than we've really ever seen them. It's just really tough. And he mentioned multiple times that had to do with the fact that certain parts of the supply chain just were not correcting fast enough, and they really pushed him. And he said, look, you're right. Interest rates rising, you have to remember, cannot impact structural issues. It cannot impact oil and gas, and it cannot impact food. And food and oil and gas, I'm going to tell you those two things we're going to dig into pretty aggressively on this call. That's an issue right now that it's going to persist. Now, as relates to some of the structural examples, autos is actually a significant part of that index. I mean, the biggest part, 1/3, is really real estate, housing, et cetera. That inflation is, if you look at the numbers, much more modest than what's being quoted, but that's really because you're taking kind of a statistic across the United States, whereas a lot of folks and the population is in the southern states. So you kind of, there's some stuff there. I'll put that to the left, but the rest of the stuff that's related to supply chain, or the rest of the stuff in that numbers, is being affected by stuff that the interest rates are not going to change very much. That said, it's really because of all of this that he's seeing, as well as low unemployment, which is fantastic. We have gotten finally that to work for us as a nation, that is really driving the interest rate increase. Now, I want to go through a couple things there, but first, let's just talk about one of the areas that he thought was really structural in nature, and there's not much that can be done about it, and that's the semiconductors. It's really interesting because some people said, well, we've really sanctioned Russia, et cetera. We're not going to ship them any semiconductors, and I'm like, you understand that there's a semiconductor shortage, right? We wouldn't be shipping them semiconductors one way or the other because we don't have enough here, so we need to bring them back here. But a lot of times people are talking about this and they maybe don't understand what the United States is doing to promote semiconductors. And as a result, the whole sector, despite all of these amazing things that are actually going on, is just getting puked out. And that's despite most of them reporting fantastic numbers, not kind of numbers. I can't tell you how many times I've listened to the call and then watched the Yahoo Finance headlines say something that is so banal on the call, and then the stock just gets clobbered. And I'm like, do you understand what's going on in semis? Anyways, let me tell you what's going on in semis. This is the American Foundries Act of 2020. It allowed for $25 billion in grants. And then you've got Intel that's going to probably go closer to $100 billion and in grants, or in various CapEx spending. This is just grants, okay? It doesn't account for any things that the company is negotiating with various states to try to supplement and bring those jobs in, much needed jobs, high paying jobs, into their states. So that's not truly fully accounted for in this number. So realize that there's a tremendous amount of stimulus going to R&D in the United States, and et cetera. And the reasons for that really have to do with this, along with other things. I'm just going to say it as simply as possible. Bringing the semiconductor industry back onshore is a long-term strategic move that the United States is making. And it has partially to do with the business side dynamics of it, and hugely to do with every other trickle-down aspect that goes along with it. This pie chart right here shows you the percentage of the semiconductor industry that is U.S. companies, 47%, okay? However, because of the nature of how the supply chain of semiconductors works, this is a little bit dated, so some of this is improved, some of it is still more or less the same. We will see major changes not until we start continuing and finishing up some of the fabs, the fabrication facilities here in the United States. But this is what it actually looks like, all right? These things that are largely speaking, the purple color, if you can't see it because you're on a tiny screen, is Taiwan. And largely speaking, the contract foundries and the outsourced ATB, that's essentially where you put them together, is overseas. The design, all the other stuff, the sell-in, all that stuff is here onshore. And what we're trying to do with all of these various semiconductor fabrication plants that are coming online in the United States, some of which will come on later this year, Intel. Okay, I might be aggressive, but quite frankly, they did mention that some of it would come on in the fourth quarter of this year. All of that is about bringing this purple box to a blue box. That's really what it is that we're trying to do so that we can have a better situation when we go to the negotiating table with China, our largest trading partner. Okay, and then the other thing that I would just mention along these lines, okay, and then the other things I would mention is I've heard this like discussion in various rooms and also other chat boards that the only reason that GDP is doing so well is because of inventory build. Okay, I really believe that you got to go industry by industry, company by company. This is LKQ. They are large autos. They are in the S&P 500. They happen to do auto parts distribution. And they did, you'll see, increase their inventory build. This is their inventory that they would have held in 2019. So really, these numbers are absolutely all available in the public companies that you invest in. You should feel very empowered to go in and take a look and see what's actually going on. It will always be the case that a company must produce 3 years of numbers for you if they can. If they had some merger, if they just became public or whatever, maybe you only get 2. But these are all things, most of the companies that I saw are really just trying to do this, which is bring their inventory levels back to 2019. And yes, that is driving GDP, but this idea that it's only inventory and not demand is just a very questionable claim that I would love to see someone qualify with some facts. Maybe it's particular areas of the marketplace they're seeing this, but this is what it looks like. To me anyways. Now I will say one thing that this actually as well implies, and this is part of the reason why I'm seeing this massive differentiation between what we're going to call winner chicken dinners and losers. And that really has to do with when it is you bought it. Okay, so a company that I will talk about all the time in the negative, even though quite frankly I think she's a wonderful exec, so it kind of hurts me a little bit. It's a female CEO. Is some companies that felt that their particular market and part supply was transitory, they did not try to buy it as commodity prices rose so aggressively in the early 2021 period. They were like, this is transitory. I've got a shot at getting a lower price. Let me be a little more cautious about how I build inventory. And so now they're going to build inventory in probably the worst part of the inflation situation here. And they've been trying to raise prices. So that's where I think you're really starting to see companies get squeezed. And that's when you hear a lot of the CNBC people, the Wall Street people, what have you, talk about this kind of return to value investing, return to fundamentals. I think that might be where people are trying to do their research. I don't know what everybody's doing in fairness, but that's definitely something that I looked out for this quarter to try to understand what was going on in the numbers, because absolutely some people in retail crushed it, Target, TJ Maxx, etc., and some people failed miserably, Amazon. Okay, so it's a real thing that you can look out for and that you can do, and if that's something that's of interest, we can ask it in the Q&A. Now the final area, or the second area that I really do want to talk about, is raising interest rates. And I know that everybody is watching the yield curve. Everybody's is struggling to understand what in the world the talking heads are saying about the yield curve. And I've actually heard a lot of people that should know better on CNBC say it incorrectly. And it has to do with rising interest rates unambiguously being beneficial in some way or helping inflation. We've already talked about the fact that that's not true. But I think a lot of people might understand up and down interest rates, but they might not understand yield curve. And so it shouldn't be that complicated, so I'm not sure why that's such an issue. But look, this is what it is. If you just go to the U.S. Treasury website, some of you guys have better resources than that and can do it off of your broker-dealer or your trading platform. Maybe you have access to a Bloomberg terminal. The yield curve looks like this: 1 month, 2 months, 3 months, and you can, like, the logic of why the rate is lower in the front versus the lower in the back is it's as simple as this. If you give me $1 and I say I'm gonna give you $1 back in a month versus I'm gonna give you $1 back in 30 years, you're gonna want more back if I'm not gonna give it back to you in 30 years. You know what I'm saying? That's it. That is it. So when we talk about flattening yield curve, what we're talking about is I'm gonna give you $1, and in a month, or you're gonna give me $1 and I'm gonna give you $1.05 or something, you know, or this actually is 0.05, so real fractional thing. So if I'm gonna give you $100, I'm gonna give you almost nothing back, 5 cents back in 1 month. Alternatively, I'm only gonna give you $1.02, you know, I'm gonna give you $2 30 years from now for your dollar. Hopefully I described that well enough. But that's essentially what the yield curve means. And then when we're talking about flattening, we don't want the front to be higher than the back or to be the same as the back. Because if I'm giving you $2 for borrowing it for a month or $2 for buying it for 30 years, then I got to start to be concerned about why it is that I think that the probability is so dire that you're not giving me this back that I'm going to charge you the same as for 30 years back. And anything in between, in the middle, is called a kinked or twisted yield curve, depending on where exactly and what exactly is happening in the middle. But that's all we're talking about when it comes to interest rates. Now, every bank, there's not one bank, commercial bank, okay? Investment banks do not necessarily have to make money this way. Asset managers do not necessarily have to make money this way. But commercial banks, largely speaking, must make money this way, which is they take in your deposits and they give you almost nothing for them. And then they lend out along this curve. They lend out, if it's a U.S. Treasury, they'll give you 2% for it. If it's like something else, they'll add whatever is what they call the default rate above that. They'll lend it out to you. So different parts of this curve doing different things affects different parts of the economy. And a lot of folks are watching this like a hawk if they're on the bond side or if they just feel very clever and want to watch this like a hawk. I tend to watch this unless I know there's a very specific event. I'll look at like every 15 days. Have we made progress? This is what it was in January. The front is 0.05. Somewhere the 10 years 1.6. The 30 years at 2%. We scroll on down. Here's what it was today. 19 basis points. So we're lifting a little bit. We got to lift to at least 25 basis points because here in the United States, for whatever reason, we only move the interest rates in increments of 25 basis points. That's not every country, by the way. We got some movement here in the middle that's above where it was, and we're at 2.25 in the back. Okay, so this thing is, largely speaking, trying to make its way up north. Now, one of the things that has been pushing down this back end has been foreign countries trying to, really more or less, in my opinion, doing a big, huge vote of no confidence to the euro. And I mean, it's really got to be the euro because honestly, the Fed chairman has said more than once that Europeans are absolutely buying the U.S. debt that's longer dated. So that essentially means they'd rather get their interest payments in U.S. dollars than in euro. And one slide that I didn't even plan on using that I will use really quick to demonstrate that. I would imagine that that's not the only one because basically if you're a big bank or you're a central bank, you're going to be thinking, I got to reserve some currency against all kinds of different stuff. And most of the reserve currency is US dollar, okay? But 20% is euro, and they seem to be doing some really strange things over there in Europe with the Ukraine. So I don't know that I necessarily want to hold that much euro, you know? And so maybe what we should do is just buy the back end of the US curve and call it and feel stronger about that. Now, I'm not going to talk about this today, but the other thing technically you could buy is gold. That's not on this list is gold and or Bitcoin, but you know, everybody's got a lot of feelings about that, and we got Hope at Gurula that probably speaks strongly to that, as do, and I know you guys know Hope. He's a really amazing resource. But this would be the other thing related to interest rates that could be an issue all around. Okay, so that's the interest rates component. I know there's probably a lot just on that. Now the last couple things I'm going to just talk about is things that you should know, which is why we have been for a long time very bullish oil and very specific names within oil and gas. that had nothing to do with Russia, but how this is even worse because of the recent events of the last week. And really the reason we were bullish oil was because of this dynamic, which is Biden's renewable energy rush. Rush is the key word. I want the world to be a greener and more wonderful place as much as anyone else, but I do believe there's more than one way to do it. And I do believe the way that we are doing it was not the right way to do it. And it became readily apparent as oil traversed its way over $60. $50 is where the U.S. starts to make profit. 60 is where international companies start to make profit. But this here is pure profit, and these companies have not really moved substantially. Even here, you're really only clocking, even the move that some of them had received up until last week, this week they've moved a little bit more, was still blocking in a price of $60 oil. Now, this energy policy has done something, let me show you, that people talk about, but I think they talk about it so fast that if you're not comfortable with how commodities work, it might be difficult for you to catch what they're saying. And this right here is from the CME Group, okay? CME Group is the actual exchange, one of the exchanges where you can trade oil and gas. And this is crude oil futures. And what was happening before was that the spot price, the price that we see when we go to Yahoo Finance, largely speaking, slow to load, this price was, over 80, over 90. But the prices back here in the tail, they're right now $83, right? We got, here, let me show you. We got last price for April contract, which is the next upcoming contract. We've got that at 111. But back here in September of 23, we've got it at 84. Okay, before this crisis with Ukraine, this number wasn't even in the 80s. It was in this. It was like literally 70. And company after company after company has been saying this for more than one quarter. We will not increase capacity if it is not economic to do so. And here's the thing: when you go to increase capacity, you're going to do new capex projects. You may not actually pump oil out of the ground for a period of time. In some cases, it's very quick, but in other cases, it might take you 6 months to 2 years for newer reserves, for what have you. And remember, unlike other countries where we can just put a gun to someone's head and make them pump and make an economic decisions, here in the United States, companies have to be beholden to shareholders. And because of this particular policy, the back end of the curve had a lot of pressure on it, such that the front end was very high and the back end was low. That is called backwardation in this marketplace. The opposite word to that is contango. So you guys, if you really want to learn all the vocabulary of this marketplace, you can look those up and see what's up. But because the curve was backwardated, new projects coming in after hedging, we're still only going to price in at the high 70s. Now you're high 60s, low 70s if you were very lucky. And that is that is because of the way that you would hedge to make sure that you were not doing wrong by your investor. And also, if you're an energy exec and you're like, am I going to hedge this partially, even though I can't tell what's happening farther back, and I'm really afraid this Biden policy is going to push it down, so I don't know if I should do that. And then we've got OPEC at capacity. It was very hard for any executive with any kind of caring about their investors to do that type of capex spend. Now the back end is lifted quite a bit, so we'll start to see how much that impacts capex. Capital spending, I mean, for those of you that are still learning the 1 trillion and one jargon words of this business, but it's very hard for them to make that call. And, I'm going to say it now, for whatever reason, I'm not sure why anyone would think otherwise, but the best energy traders on this earth work at the energy companies. I'm not confused. If they could have figured out a funky, exotic structure that would allow them to be able to lock in a higher price than what they were saying on the call, then they would have stated that on the call. But in fact, that's just kind of how it is. And if we were confused at all about the fact that they were kind of waiting to see a little bit of clarification, not just from OPEC, but from this Ukraine issue, all of the earlier companies that reported that they kind of needed to see a little bit on Ukraine, but that they also were a little bit worried about the back end of the curve, so they weren't reporting capex. EOG, which is one of my favorites, reported a little bit late, and they are basically not gonna, they're horrid. This was the slide that came out of their additional information for investors. And as you can see, they are not going to be additionally, they are giving back a huge special dividend, but they're not necessarily buying back stock because they kind of want to see what's going on here. And as you can see, this slide, which they had in their deck, shows you that they're going to just take from every single one of these places. This is the cheapest place to get your gas from. And then you can see it all being piped down. And then I never saw these little boats, but apparently now it's very clear that exporting this overseas is going to be the right call. And this is why I would really let you know that I've been very concerned and upset throughout this entire time following the progress of the Ukraine. I think some of you guys know that I've been talking about Ukraine is not being taken seriously, probably on Clubhouse as far back as November, December, but you know, very aggressively even with the Gurula folks for a little bit longer. But sometimes there's a lot of news flow that's coming out that makes it hard to see how to think about the oil production market. I want you to just see Europe here, okay? And the dark area is how much is consumed. So, and the little circle, the clear circle around it, that's what's produced. So let's go to the United States. In the United States, we are big time consumers of natural gas and oil. But really, this chart just tells you oil. You'll see the same thing if you superimpose really any of the commodities with the exception of coal, but or any of the energy related. Anyways, all right. So big dark circle for consumption, little circle, right? Okay. Russia is the opposite. Okay, just to give you a sense. So it's not just that they're a big producer. They don't use a lot of it. Then you can see the Middle East here. Now let's look at Europe. Okay, this circle right here is Norway, which is the only net exporter in any kind of meaningful way. This circle right here is the UK. It's literally British Petroleum because that is the major company that's going to be pumping this. As you know, with Brexit, they're no longer a part of the EU, so there's that. And there's China. China is still a net importer of its energy because as much as it produces, and this is not a small circle, by the way, it still has to bring it in because it's got this ginormous population and this huge aspiration for where it would like to be. Okay, so that is probably a more thorough way of thinking about it. And then as to Biden's policy, even before this, the thing that bothered me was that I didn't think it was really effective. Here is coal usage last year. Coal is the most polluting of the energies. And we can see that although right at COVID, we had a huge decline in the use of coal, we did not have a decline last year in any way, shape, or form. And that's largely speaking because we had a crazy winter, and because of these lovely policies, we had to do this winter. We had to support it with both oil and coal, which is not normal because the price of nat gas went so high. Nat gas is going to help with energy. Anyways, I'm not a fan of this particular policy. I am largely speaking apolitical, but I am also a truth speaker, so that kind of is what it is. Pipelines-wise, before the issues that happened this last week, I'd been watching this Nord Stream 2 creation. Now, there's Nord Stream 1 that's led along there, but Nord Stream 2 would have brought in a bunch of Russian oil and gas, bypassing this pipeline, which goes through the Ukraine and is one of the more expensive toll chargers of getting the oil across. So now Germany, which uses oil and gas and does not necessarily produce any, you know, it is kind of what it is. So this pipeline, and the only other pipelines that really will get you in the right sort of way are the ones that go through the country of Turkey. Those pipelines service Europe via the Middle East. And so originally there had been a lot of talks with Qatar or Qatar, depending on how you prefer to pronounce it. In America, for whatever reason, we pronounce it Qatar, but overseas they pronounce it Qatar. Anyway, those areas in the Middle East all are serviced by a pipeline that comes through Turkey, largely speaking. And then Europe does get a lot of oil and gas from Africa, all over Africa. But it is the case that 35% of nat gas comes from Russia. You know, these statistics vary depending on where you take them from, but it's anywhere from, let's call it 30 to 45%, depending on where you get it from. I'll just say it like that. So this is the state of affairs for Europe as relates to energy. Now, the other little state of affairs that I wanted to mention, there are two other states of affairs that I want to mention on all this aggravation that we're experiencing now in the region is fertilizer, which I know y'all remember. I know that a lot of you guys remember me talking about my passion for Mosaic, which happens to be a hometown favorite because the phosphate potash, that's very much so coming out of the great state of Florida, where I'm from, and it's really coming out of Central Florida more than anything else. Mosaic is, I think they're headquartered in Minneapolis, but they are all over Central Florida. It just has to do with where the potassium phosphate, all that stuff actually is located. But in general, what I want you to understand about that is that the situation in agriculture is equally as problematic for Europe. And the reason it's equally as problematic is, okay, number one, I'm sure everybody's already seen this. The price of corn, soy, wheat driving up higher. Palm oil is something that Asia is really the primary driver of, Malaysia, et cetera, India, or excuse me, Malaysia, Indonesia, et cetera. You'll see a lot of palm oil plantations. But these prices have all gone straight up. Now, palm oil is also going to be going straight up because the price of oil is going straight up. So it really gets driven upwards. Let's just put that to the left. Also, all your secondary contracts on almost everything, agriculture has been going straight up. So there's plenty of money to go to fertilizers because there's plenty of profit to be made. That said, there's a great room on here, agriculture room, full of wonderful farmers, very hardworking people that work in the Midwest. And from what I can tell, I'm not convinced all this money goes to the farmer at the end of the day, but let's just put that as well aside for the discussion. I want you to understand that there is a relationship between agriculture and oil. It's not just the palm oil that I just described, which is absolutely very directly impacted, because palm oil does go into making plastic. It does go into making a bunch of stuff that you might transfer over. But for some of you who are still learning about what gets made where and what is done with it, ethanol, the stuff that goes in your automobile and is a bit greener, is also made from corn. It is also at times made from sugarcane, but usually it's going to be made from corn. And this is from Archer Daniel Midland's earnings report. And in that report, last quarter, EBITDA margins on ethanol were only 23 cents. But because this oil shock and stuff and the tightness of the market has gone to such extreme, they were seeing an industry average increase in ethanol EBITDA margin prices of $1.45. So they made 5 times as much as last quarter on ethanol. And that is a testament to what we were seeing in the oil markets as well, et cetera. So realize that oil prices absolutely, if anyone seems to be confused about it or second guessing it or whatever, oil prices absolutely affect agricultural prices, both directly and indirectly. Okay? So I wanted to make sure y'all understood that you guys understood that. And also, the other reason that we were so passionate about fertilizer and so concerned, even more so, about the activities happening currently in the Ukraine and with subsequent fallout globally, Russia, et cetera, we were going into a very, very tight fertilizer market. These stats are from 2020. I did read the most recent release from I forget exactly which organization it is, in 2021, and I had trouble getting a visualization that made sense. But even in 2020, the market for fertilizer was incredibly tight, okay? And then what happened was we started to hear that China wasn't going to export any fertilizer. We started to hear that, I think, around the September-October time frame, and then they just shut off nitrogen at that point. And then subsequent down the line, they were like, listen, no potash, no potassium from us, or no phosphates from us this year either. Sorry, guys. And so that really was concerning for me, except that I am long Mosaic as far as that goes. Yeah, so I want you guys to see very clearly, this is a map. And wherever there is some color on this map, that is where crops are produced. And you can see for Europe, everybody's talking about wheat and corn, everything coming from Russia. Okay, that's true. But at the same time, I want you to see how much of this map is yellow, which is 100% cropland use. Pasture is going to be where you're going to raise like cattle, stuff like that. But yellow here is where crops are produced, okay? And then I want you to see where is fertilizer produced. China, India, they have a shortage because India had really bad weather, so they're probably not going to be exporting a ton. The United States, Russia, Canada. You see any European countries here on nitrogen? No, right? Okay, here we go. Potash. Potash, depends where I grew up, it's called potash, but I'm not saying anything. Here, the first European country you find is Germany, okay? And then we've got some production in Spain, but mostly it's really Russia, Canada, and Belarus. Belarus, by the way, also announced they would not be, they were doing something to lower the amount of exports coming through here. Here is phosphates, okay? Phosphates, China, not exporting. United States, absolutely exporting. Morocco can be touch and go from time to time. The biggest producer of phosphates globally for exports that is actually a company versus a governmental organization would be Mosaic. Anyways, wanted you to see that so you understand that aspect, because I think that's important as you're listening to the news media on this stuff. Now, historically, I've always been afraid of doing this company, CF Industries. I do have some long exposure in it, but I just want you to know if you're looking at nitrogen, there's always an extra whammy on nitrogen if you're not doing, depending on how you're putting it on. And that's just because nitrogen's relationship to nat gas, you kind of have to understand really, really well. We happen to be the low-cost producer of this nat gas, and they were talking about the arbitrage globally because of that. So I couldn't help myself, and I went in. I may live to regret it, but that dynamic isn't quite as strong or even meaningful for the other two areas of fertilizer. And those three areas of fertilizer are really the predominant areas of fertilizer. Last thing I'm just going to mention on defense, because this actually is one of my shorts. I just want you guys to see this. Here's military size by country. You'll notice there's no European countries on here other than Russia, And then here's defense spending by country. You'll see what you'll see on this slide as well. We're by far the largest. This China estimate, and when you're looking at military size, just realize that China's got a gigantic border, one of which country might be this country that, we're trying to get them to be very, very aggressive toward, even though that would be the same as us asking someone to be aggressive towards Canada. So it's a little strange, but I'm not going to try to get too political. I'm always scared of going too far in there. But these are the defense companies as well. The top global defense companies by market cap, and you'll see that the first 5 are all American. Then you've got a French company at 50 billion in market cap, and then you've got another French company at 20 billion in market cap. Everyone else is an American company, and from there, I just remind you, and I am constantly reminded that there is no way that, given the way that lays out, that it doesn't impact the U.S. taxpayer. Okay, so with that, I'm going to hit the pause button and take some questions. Wow, this is going a little bit longer than usual, so I'll take maybe like 15 minutes of questions. I got to get back to my trading too.
That was wonderful, May. Appreciate the presentation. You always come through with very insightful information and a lot of information. And this is what we're about here on Live Trading with Dr. and Friend, just providing our listeners with that. So I'm going to open it up to the audience for questions. I'm sure that we have some on stage. Have some questions. If you do have questions and you're in the audience, just simply raise your hand and we'll bring you up, and you can ask your question to May. So we'll get started. Anyone has a question?
Yes, this is Dr. Carl. I would like to compliment you on an excellent presentation.
Thank you.
A very excellent presentation. And while I wasn't able to see the charts, I am definitely going to subscribe to you. I believe you said on YouTube.
Yeah, thank you. I really appreciate that.
and I would recommend that everybody viewing look at her presentation and view it three times, and you'll get a lot of information. Thank you for being with us today.
Oh, thank you. I really appreciate that. I mean, I think the thing that upsets me the most about the current period, so I will say this, is that, you know, it's given how it looks to me, I'm worried. I'm always worried about the fact that we will most likely have to send our folks in. You know, it's really American lives. And, you know, I grew up in a town where they absolutely recruited. My brother lives really close to Fort Drum. So I get really a little fired up and passionate on some things. So I would mention that's part of the reason why I'm very excited for people to have information and make their own decisions. Are there any?
Yeah, no, David's absolutely right. You have a thorough grasp of the fundamentals and what their importance is, and I can appreciate that because you know I'm more of a technical trader, but I appreciate those who take the time and study the fundamentals and know exactly what is going on, both on a micro level and on a broader macro level. So I can appreciate the amount of work that you put into what you've done. So thank you for that. We'll take other questions if there are. We don't want to take too much of May's time, but we can take one or two others.
So, May, could you just let us know how to subscribe to your YouTube again, please? There were a couple of questions in regards to that.
Oh, that's so nice. Hey, Satara, what I'll do is I'll send you the link so that it's easier and they can just get it through the Discord on your side. Because I know you guys are really good at communicating that way. So.
Oh, all right, sounds good.
Thank you. Brian, I have a question.
What's on your mind?
I was wondering, because my next door neighbor and I, we talk a lot.
Yeah.
So he gave me some money and I took it and I put it on IPI. Did you guys cover that at all?
IPI I don't really follow. What is that one?
Potash.
Oh, yeah, no, I only cover the large cap names. The only thing you'll really want to look for any of the fertilizer companies, because they've gone through a bunch of different kind of twists and turns over the years. But you want to just be able to make sure that you can identify that the places that they're working in is not Russia, because obviously right now, even though I think China will buy up every bit of fertilizer that Russia wants to sell it because of the things that it needs to do, like a lot of these companies used to have mines in different areas. So for example, Mosaic has a mine in Brazil, and Vale, which was one of the bigger investors, had to punt out a bunch of it, which is what drove the stock down below to the 36 level in November timeframe. And at that time frame, we were like, listen, you just got to hold your breath, because if this thing is somehow magically, despite this massive amount of shares that just came onto the market, holding 36. And I think it at one point maybe dipped down a bit lower than that. So I'm not going to pretend like that was a scary situation for me, because I really did believe in this company and what I was seeing and their numbers and in the dynamic in the marketplace. But because really with these mines, you just have to make sure, and what you'll do is you'll go into the 10K and they'll tell you exactly where, or hopefully they should tell you where exactly the mines are. And if you can confirm that those are going to be in a place that is not Russia, then you're probably in really good shape. Oh, then you should be, yeah.
Which potash tickers did you guys cover?
It's really just Mosaic. Mosaic is really, yeah, they're really the largest producer of potash and also potassium, you know, in market cap by a lot. But also, if you look at the fundamentals, to the extent that some folks do enjoy just understanding that side of the business as well, I think they trade at like single digits multiple to earnings, but they are growing the bottom line at like 50%. Here, let me actually show that. I'm gonna share my screen again really quick. This is one, hold on a second. Let me share my screen.
Did they cover that May is going to CNBC soon?
That would be lovely if I could. Okay, so this is actually the earnings. If you guys are on the Discord and can see this, but if this is actually the earnings from this last quarter for Mosaic. They grew revenue 56% because they were coming off a fairly low base from last year. Operating income, which is this number right here. So this is where sometimes you end up with some things that are reported strangely, and it always becomes an opportunity. Operating income is 969.7 versus 294 the year before. Okay, so what that means, and gross margins are out the roof. So that means they were 246% more profitable. Now, there's a bunch of mess between there and net income. So when this thing first came out, it was showing some kind of weirdness. But really, this is an amazing, ridiculous earnings report. I mean, the company, even if you just want to buy the stock and you're not going to do options on it, there's only a couple things that are going to happen. They're either going to buy back stock or they're going to shoot you back a dividend. But yeah, I think where the news might have reported it strangely is from a diluted EPS perspective, it looks a certain way. And that's just because they had this very strange income credit from the previous year that cosmetically looked a certain way if you were really doing an apples to apples comparison from last year. By the way, this thing from last year that also, if you compared it to 2019, made everybody puke the stock out was about when I started to revisit this company. I've actually owned Mosaic from time to time for the last 20 years. So just, you know, this one comes up. It's just because this is a hometown favorite. I mean, they really are all over Central Florida. Now, the other thing I wanted to show you on Mosaic, this is from their earnings call, their earnings presentation deck. They sell these three things: potash, phosphate, and fertilizants. I don't know how to pronounce this last word correctly, so you feel free to correct me if you have a preferred pronunciation of this. Fertilizants, they sold, it's just kind of already mixed, so to speak. They sold more or less what they sold last year, but they sold significantly.
Your screen is out of this course.
Oh no, okay. Can you try to correct that on your side as well? So I'll read the numbers to you, but they sold 2.7 million tons of potash in the fourth quarter of 2020, but in this year's quarter, they only sold 2.1 million tons. So they reduced the amount they sold, but their gross margins were 3 times higher. Just in case there was any confusion that this company was like, no, friends, we're getting pricing. That's what they did. And then it was a very similar look on phosphate. They sold 2.3 million tons in the fourth quarter of 2020, but they only sold 1.8 million tons in the fourth quarter of 21, doubling their average selling price. And it's not because there is a lack of demand for fertilizer globally. Let's call it what it is. You know, this is especially since China cut off these two things in I believe the middle, maybe the beginning of the fourth quarter last year. It's not because there was a lack of demand. I mean, we are in the winter right now. For the northern hemisphere, you've got to plant in, like, literally right now in March is when you plant, which is why I'm really unhappy that the timing and the failures of diplomacy to modify the timing is such a sad thing. But in the second quarter, typically you would sell from just a sheer raw number, you'd sell more fertilizer.
Copy that. Thank you, May.
No problem, Patrick. Good to always hear your voice. Anyone else got questions? Maybe one more question?
Don't be shy. Come on up.
I have a question for.
Yeah, sure. What's on your mind?
Hey, so how did you get into fundamentals? I heard you talk about the CMI. How did you get into?
Oh, I've actually been working in finance for a long time. That was my first job out of school, so they taught me properly at my first job a lot of this stuff. And then it's just literally, even if you're taught properly or what have you, really it's just doing it consistently over the years and seeing a lot more companies. You know, so if you are only in this game of fundamentals for like 2 or 3 years and you've read like maybe a handful of companies, you're probably seeing that with every company you add on, you're getting better at reading these financial statements, better at understanding what's happening in the industry. It's just time. Like the way that I've described this before is my approach is a little different from others because in my endurance and doing it across so many countries or companies and industries is because I'm a little bit nosy, for lack of a better way to describe it. I really see these companies the same way that someone might see like shows on Netflix. I want to watch all of the series because, quite frankly, they're all connected. If you'll notice, I used the fertilizer companies to tell me what's going on with the companies that really deal with crops, like Archer Daniel Midland really does make wheat. That's their deal. Corteva has like a mix of stuff. Those companies, I use those companies to tell me or to tell on other companies. I used one of the slides I didn't show here, but it's a slide that told me that we were definitely using coal in the United States of America was the train companies, because the train companies are how you get coal from point A to point B. And it actually, especially for the East Coast train companies, makes up a huge part of their revenue. So because I'm nosy like that, I just try not to apply that to people, and I try to apply that to companies. And then you can kind of see how, as you get just more time, it's really just more time, and reading these things and seeing how the things that one company is saying affect another company, you just get better at it. It's like all things, time and effort, and that will do it.
May is also reading 10Ks and 8Ks.
Yeah.
Fundamentals,
Yeah.
Hi, May.
Hey, girl. How you doing?
One more question, if it's okay.
Of course.
So, in regards to like trading forex, I know geopolitical factors always affects the market. So
Yeah, it does.
Taking a look at like today for the pound yen, there was construction PMI. I've heard like, sorry, that's my son, hawkish and dovish activity.
Yeah.
But where can I go to like get more insight on terminology like that? Because I want to get deeper into the fundamentals aspects.
Okay, so economic fundamental research is a little bit different from company research, but I'll tell you what, I don't know, country by country, the numbers mean slightly different things. There is a great book for the U.S. economic fundamentals, the U.S. economic data. You'll just have to realize that every country does take approximately the same thing, and so then you can translate it to that country. But once you understand what the number itself is trying to say, I think a lot of times that can be helpful. I do actually read all that economic data as well. In a lot of my, like when I know that, like for example with CPI, next week I'll probably go through CPI and then like line by line and really talk about where it affects different things. But what I'll do is there is a book that I think is boring as it comes, but it does do an excellent job of going through all of the American economic data that's issued and where it comes from in America. And I'll definitely forward that over to Satara.
Thank you so much. I'm glad I stayed into the room.
I'm so glad it's helpful. In fairness, I am a super dork about this, so I am very passionate about this, but I don't expect anyone else to be, as far as it goes. So if this is something you actually like, it's the same as if a kid told his dad that they loved football and he happened to be a football quarterback and guru, so I'm happy to help as far as that goes.
With that, May, we're going to go ahead and respect your time.
Cool.
Thank you.
Awesome.
For being here with us today. We appreciate your presentation, and we're looking forward to having you come back on a regular basis.
Yeah, this is fun.
Lots more questions for you. So.
All right, awesome. Thanks, guys. Happy trading. Good luck in this crazy market. Bye.
Thank you so much.